Greetings and salutations. Good morning. Hope all is well. Hope you had a great night of sleep and that you are ready for a new trading day. We are going to go ahead and get started. We're on CNBC.com at last, reporting Dow Jones Industrial Average was up 0.20%. S&P 500 up 0.63%, and the NASDAQ was up 0.82%. Russell 2K dropped 0.72%. The VIX currently is up. It is at 1453. That is 1.40%. For our pre-market, the Dow futures are down 0.10%. S&P futures down 0.30%, and NAS futures down 0.50%. We have the stock futures slipping as investors digest the NVIDIA AI conference and await Fed decision. Europe last reported DAX up 0.16%, FTSE down 0.15%, CAC up 0.40%, and FTSE Milano up 0.56%, with stock 600 being down just 0.03%. Asia has been taking a hit lately, but the ASX 200, which is Australia, up 0.36%. The Nikkei up 0.66%. However, Kospi down 1.10%. HSI Hong Kong down 1.24%, and Shanghai also down 0.72%. The Nikkei 225 ends above 40,000 after Bank of Japan raises interest rate for the first time in 17 years. It's a lot going on, everybody. Breaking news today: the Earth is on the brink of key warming threshold after a year of chart-busting extreme. Researchers say that is going to come into effect, whether we like it or not, sooner than we think. For our Forex Factory calendar, we have one orange folder, which is building permits. That was at 8:30, so that information has already been released. It was not earth-shattering at all. In fact, the impact was neutral, I guess you could say. Not bad or good for the economy. Housing starts is better than projected at 1.52 million. And then at 4 o'clock, the tick long-term purchases will be at market close. That'll be released. So hopefully we can escape some heat as far as that is concerned. So that is for our Forex Factory. For investing.com at 8:30, like I just said, we got some good news there. We had a 1 star, which is building permits month over month for February, but for 2 stars, and this is at 8:30, the building permits for February was again good as better than or good for the economy. Housing starts for February also did well. Those are 2 stars. The housing starts month over month for February is also 2 stars. That was neutral. The red book year over year was 1 star, again neutral, so nothing major there. We got a 52-week bill auction at 11:30. That is 1 star. And then at 12:30, 2 stars, the Atlanta Fed GDP Now Q1. At 1 o'clock, another 2 stars, the 20-year bond auction. We have the U.S. foreign buying T-bonds for January, but that's at 4 o'clock. Also at 4 o'clock, and also 1 star, the overall net capacity flow for January. 2 stars for the tick net long-term transactions for January, and then a 1 star for the tick net long-term transactions, including swaps for January. And then at 4:30, the API weekly crude oil stock. These 2 stars that we have right here may or may not be significant when paired with what's going on as it relates to earnings. So for today, before market, we had Xpeng, Tencent Music, Huya, Calores, and Cormain. Some of us may recognize Xpeng from the trading it. Tencent, I believe, is connected. I think that's the owner of TikTok, if I'm not mistaken. After close today, we have TerraWolf Health Equity, ZTO Express, Haro Health, Precigen, Sickle Cell, Ramada, and Corvus. So that's going to be all or mostly healthcare in the healthcare space. Tomorrow morning before the open, we got Pinduoduo, General Mills, Jinko Solar, BeyondTech, Ali, Signet, Sport Radar, Kingsoft Cloud. At least in the next or sort of today, tomorrow, that's consumer cyclical, a little bit of tech, and some healthcare. After the close tomorrow will be Micron, Chewy, KB Home, Five Below, Guess, Heartbeam, Steelcase, Lithium Argentina, Avotech, and Curiosity Stream. So you are definitely looking at consumer staples and consumer discretionary. So over the next couple of days, you know, I would expect there to be some, I guess, what you want to say, volatility based on the next 2 days. Also, for those not in the know, I did post it on in the Telegram group. NVIDIA had a conference yesterday, and one of the takeaways from the conference was you got a chance to see how many different industries, including some of these on this list, that NVIDIA's chips are able to power in many ways because of the software that's going on in the background. So you may be seeing some movement, especially with AI related stocks, just because of that conference. I'm not saying anything major shifts, but definitely some stuff jumped up on the radar. The other thing that happened, though, that could concern traders is that Google is pairing up with Apple. Their Google has, believe it's is it an AI web browser? I believe it is, and so they're going to be teaming up to do something along those lines. So obviously, you got two tech companies that are working together. So that could, and it's a positive thing technically. So that could also have some effect on what we are doing in terms of trading. We have Adam Mancini on Friday. SPX hit up trend line support at 50.95, and we got to 51.66 target before dipping. Overnight, 51.32 support as posted. We hit exact, bounced to 51.48 and dipped again. Plan today, 51.21 is weak. 51.13 through 17 is major support. Must reclaim 51.33 to resume the leg up. Hard sell if 51.13 to 17 fails, right? So 51.13 to 17 is what we are aiming at, all right? So I'll just drop this down. I'm already in SPX. I'm going to clear this up. Good morning to everybody that I can see. Saida, good morning. It's my time. Good morning. Lady D, Janae, hola, mi hermana. Glad to see you are all on and ready for our trading day. We started off with a gap down today for opening bell. 51.33 is what I'm going to mark. That is the level. that Mancini mentioned. So we're gonna get that taken care of. And we better do it like this. So 51, we're gonna show the price on the right. This is a Thinkorswim that I'm using. I usually just call that the linchpin, so I'll know what that is. And so that's 51. I think he said 51.33. Sure, I got that right. 51. I'm sorry, 51.13. 51.13 to 51.17. All right. 51.13. So I'm putting this on the chart. So as I watch it throughout the day, I'll be able to 51. I'm just going to use 51.13 since that's the lower number. But you can see right here, this is a price where a point where this has been retested before. So there's a nice previously used price point. And then we're going to mark the 15-minute numbers for our breakout. We'll just put breakout. And then this is where we are so far. So we won't overdo it. But so as we continue on through the call, we'll come back to keep checking. But I can definitely tell you this is where it gapped down from, where it closed yesterday. This was also a point on the 14th. This is the same zone area that we've seen, before. And then, we definitely have these levels going up, and this is on the 15-minute chart. This down here, 51.24, also can be a point where it can stop and or turn around. So we got nice little range in there to be looking at throughout the day. All right. So we will leave that at that. All right, 51.21 was weak, so that's right in here. About right in there. Okay. So that's at this turning point that he was saying that could be weak, 51.21 area. All right. So we do have at the bottom of the screen, you can see that the ticker going. We have the options 411 6-week live coaching call, April 1st through May 17th. Costs $397. You can register at educatedthetrader.com. What will we be covering? Will she be covering? Open accounts, how to open your accounts, navigate the platforms, understand the trading lingo, learn charting, selling strategies, and how to create your own trading plan. I cannot stress enough how creating your own trading plan can be valuable to our consistency with trading. Does anybody have any tickers? I didn't see any tickers get posted yet, but I will. I'm going to swing back for this first time. Go over here to the Dow futures to see what has happened so far. And we have Dow futures up 0.01%. Look at the other futures as well. S&P futures 0.22%. Now it's and there that's down. Now it's futures down 0.46% for right now. And I am more so concerned about what the VIX is doing, which is up a little bit more since the beginning of the call. Okay. I see Google in the chat box. Let's hop over to Google. Google is one of the companies that was trending this morning, which I believe is connected to the NVIDIA conference. I'm going to switch this to the daily. Actually, I should switch it to the monthly first. Let's go with monthly. Just see what it's doing overall and work our way down to daily. Alrighty. Close a couple windows over here and clear drawing set. All right. So Google, as most of us probably know, hitting this, they're at their highs. But one thing that's obvious, and this is on the monthly chart, one thing that's obvious is it keeps turning around up here. So there's definitely some sellers up in this 152, 153 area. It's been bouncing off of that area. So we know that is a factor. Overall, it's on the uptrend after a recent pullback. There's some people who may use the Fibonacci lines. So where this is bouncing off is about where there is a 61% Fibonacci retracement line. So this is definitely a resistance area. So it'll be interesting to see if it will try to push up and continue or turn around and start dropping. This on the monthly chart. All right. So we'll see if there's any formations, any chart formations on the weekly. And I see a seller zone right here. And I believe it was yesterday we were talking about zones on top of zones and waiting for something to come out to pop out of there in one direction. This is a good example. This when it gapped up on this particular week, it gapped up into a seller zone, leg in, base, leg out. So that's a seller zone there on the weekly. And then there's a buyer zone right here, leg in, base, leg out. All right. And this is again on the weekly. I'm working my way down to daily, but leg in, base, leg out for the seller, and leg in, base, leg out for the buyer. It's in the buyer zone on the weekly, and it has a gap right there that it is working on filling right now. It could always push back up, obviously, but that's what's going on for the week. Obviously, we new to the week, but and then here we are with the seller, with the daily, and what this actually did was went up when it hit that turnaround. Obviously, it gapped up 2 days ago. So we are going to mark this gap as being right here. Since it has already started pushing down. Some people mark the gap based on what the body of the candle has done in terms of price action. Some people do it in terms of what the wick does. Either one that you choose, I would just encourage you to be consistent with it. For the most part, I do the wicks. I include the wicks because I look at it like that's where price action actually went. So I try to be consistent with that from that angle. But I do understand the other side of it. And I think as long as we understand what's happening, that's the main thing that's important. What's happening with the prices. In this case, because of that gap up, I look at it like this is a buyer zone right here. I'm gonna use green for this. So this is the gap right here, and then leg in, and I don't even like smaller leg ins, but leg in, base, leg out. But the main reason I'm doing it this way is because to take advantage of this strong leg out, where the way it pops up. So this would be something to watch because this could very well be another leg that's trying to, push down in here today or tomorrow or something like that. So Google will be definitely something to watch. But in the meantime, while it's still doing that, in the seller zone, you got there's really multiple things you could do up here. If you want to take advantage of the leg out that's up here, because in this case, there's a couple ways to do it. The one for me that makes the most sense is just to go leg in, 3 in the base, and then a leg out for a gap down, right? So that gap down. So there's your third leg out. So that's the strongest leg coming out if you want to do that. If you don't care about that, you can always do this, but it'll just be a smaller leg out. Either way, it's going to be a revisit down here in price. I guess the other thing you could do is, again, have a smaller leg in right here. It's real tiny leg in. But you also get the benefit, if you chart it that way, you also get the benefit of this strong leg out. So in this case, it's leg in, 2 in the base, leg out. And depending on how you started trading, 2 in the base versus 3 in the base may be significant for you. Personally, I'm just fine with a smaller leg in. I like this longer leg out, and I like it with less candles in the base. Either way, again, like I said, this is happening over here. So it pushed up, got pushed out, and there's that. But it definitely went past this previous level in terms of the price action. So that's the other reason why this whole setup looks, I'm taking it from that angle. We're going to add a note and just signify that this is a gap right here. All right. And then we're going to, anybody got any questions? I obviously can see the chat box. So if anybody has any questions, let me know. All right. So we got, okay, got this gap pushing down right here. I'm gonna make sure I get that close. All right. And then, so that's for Google. I don't see any questions, so we'll keep it moving. You might want to look. I guess it wouldn't be a bad idea to look and see what's going on with the. So the 22nd is this Friday, because Google is pushing down. That means that a call credit spread might be something to look at. This is not investment advice. This is, hey, Lady T, good morning. I already know what you're laughing at too. So the way we tend to do this to find out the range that we might want to start investigating the trades, we take the current price, which is right now 146.57. And in this case, we would use over here, we refer to it as the broker plus minus. I'm pretty sure it's called something else, but on Thinkorswim, on the option chain, it's this number right here, the volatility number. And we add that and subtract it. So we'll do 3.77. That's 150.34 at the top. So that means that I have to make sure that the number I choose is above 150.34. In this case, it would be this right here, which is the strike is 152.50. This is, I switched mine to out of the money. Since I'm doing selling, I do out of the money. So this is saying that there is an 88% chance that this trade should expire out of the money based on this probability out the money. All right. I build my credit spreads differently than some other people might be used to seeing. I just do one leg at a time. So since I'm doing a credit spread, 152.50, I click on the bid with the 0.27, and then I click on, so this is the sell leg, then the buy leg up here. Ask is the buy leg, And then when I have both, that gives me what my premium is, right? And this is a 2.5 spread, which is $250 in this case. So I'll be getting $14 or $15 premium on that 250. Not my favorite amount, not the greatest amount, but based on the situation, with the percentage right now, I can live with it. And it's earlier in the morning, so we're just now getting started. But I'm just showing you what I would be doing in terms of deciding what to do for right now. You could always increase this if you wanted to, in case price comes back up. But that's still a safe zone. 88% probable that this should be a good trade is fine. 76% is closer to 80. So, I mean, I would have just got more premium if I went that route. So, but I figured I'll just take a look at it. And then this is a set for Friday. As this continues down, as it's pushing down, we may see some, we would definitely see something happening, obviously, with the buyer zone. But see, then Hood, Robin Hood. Robin Hood has been, they trying. They trying. This is when they came out. So they're trying to push their way up. And this could very well be creating this next upcoming month. I'm back on the monthly chart for Robin Hood. This could go either way, meaning it could, since it looks more like this one, this next leg out could be a drop, or it could be a, turn up or signal to keep going up. So those small candles in the base are basically like 50-50 in terms of the formations. So I usually wait for that third leg to come out. But this is a chair formation right here on the weekly. That's a chair. If we're going from 13 to 14 right there. And then there's a formation down here. This is a U formation. This is where price turned around. This is one of those formations where you can, it's up to you on whether 3 in the base, definitely for me, because they're right in the row and they're about the same size anyway. But that would mean that this leg out is what you would be using as opposed to this leg out right here. Normally I would be going with this leg out, but I don't think you really need to add that much risk. Smaller leg out, might be just fine. But this is on the weekly. There's another U formation down here that has the same, kind of connotations where you got a huge push out on the leg out. Or shall I say the leg out after, or the next candle after the leg out. But you have this right here going. So the weekly definitely has some noticeable levels to them. This is the daily. This is the daily. This is the daily. All right. And then we're going to do, this is the daily that the chart has made. We're going to do, a chair. And actually, there's 2 things you can do here. Depending on your temperament, you can do leg in, base, leg out. That's one version of it. Good morning, big boy. That's one version of it, leg in, base, leg out. And then you can also do a chair formation here. Activate, and you can do that. To be honest with you, in this case, normally I do cheers. I would normally mark this as a cheer. But in this case, I'm fine with marking it this way because it'll be less risk, and that risk can come into play Less risk meaning when I am crunching the numbers, there's a difference between what this is, which is $17.81 versus $18, where I will be starting my numbers. But just as importantly, doing this route is fine for me because there's a gap here anyway. So that gap is resistance. So it's a small gap, but it is a gap. So this gap down and created a stronger leg out regardless. So I'm okay with the way that's set up. There's nothing there's nothing really here that has a formation for Robinhood. I don't really see a formation that on this particular chart that wouldn't feel like it was being forced. What I usually do in this case is acknowledge that there is obviously something happening in this zone. So that's what I would be doing here. It's clearly something that's going on in this zone, so I'll acknowledge it with that because the buyers are pushing this up right here. But in terms of a clear formation that we would, that would normally be charted without trying to force something, I just don't see anything. At maximum, maybe leg in, 3 in the base, leg out, but I don't see that as being clear for right now. What I would be doing in this case, though, is taking a look at the weekly. And so remember when we looked at the weekly a second ago, I saw this as a chair formation. So I am just fine with marking this chair since I know that there's a strong formation here and doing it that way. And there's also a little bit of a gap right here. Even though people knock Robinhood because they feel like it's not for professional traders, I gotta be honest with you. I'm kind of team. I think I'm team Robinhood because I appreciate the underdog and I appreciate somebody who come in and set a trail that other people have to follow. Everybody wasn't doing that no fees, low fees stuff until they showed up. So I feel like, hey man, you got to give them some room to grow. But anyway, so what ends up happening by going to that higher time frame and just charting the cheer, what ends up happening is it just shows us this would be a gap up for a leg in, you could say. The gap up. Now 1, 2, 3, 4, 5, 6, 7. So that would be like 7 in the base. So that's not a good, that's not a strong zone as far as I'm concerned with that many in the base. So I would be expecting if it came down, and again, this is going by the weekly numbers, but if it was going to come down, I would expect something to happen in terms of it continuing down. But I do see right here, there is some semblance of a formation right here and right here. Right. So you have, and that's on the daily chart. So you could mark this one. Again, I'm not saying that it's a strong zone, but it is a leg in, base, leg out formation. So that is definitely one of them right there. But to me, the stronger one of this group is this one down here. So I'm gonna mark that like that. And then we'll do this one on top of it. Tell them apart. So I like this one because it is the stronger one of the two. Leg in, base, leg out. And when I say the stronger one of the two, I just mean the leg out is stronger. So this leg out is stronger than this one. In this scenario, the other reason why I'm marking it is because in this scenario, price would have to come down. It still would have to come down to this area anyway. It would be hitting this price point first, regardless. But this right here is the formation that I would be going with as something that's the stronger one out of everything I've seen here. So the yellow lines are, the weekly price points is still buried under there. But there's a gap here, and then I would say two formations, but and then a gap under that, because it gapped up here. So there's a plenty of I guess you could say support coming down here, or at least opportunities for it to bounce. Whether or not it'll turn around is a totally different thing. So, all right. It's my time. So absolutely, I like Robinhood as well. Yeah, I'm not knocking them. I've always, to be honest with you, every time Robinhood makes some type of change and improves, like, hey, you want to be on our waiting list for XYZ? I don't even care what it is. I'd be like, yeah. The only thing I haven't done is margin calls since they made it available. But for me, my only knock on Robinhood is that you don't really see. So this is the Robinhood chart. You don't really see their charting tools for people who, like, let's say, chart regularly, like we do, our type of charting. They don't have like the tools yet to kind of get them up and running, but or shall I say, get it fluid and smooth like we like it. But they seem to be moving towards it. Right now on the daily, to be honest with you, the only thing I really see, this is NVIDIA. I'm sorry. So I switched to NVIDIA. Right now, what I see is that it is in a buyer zone. Right here, it is in the buyer zone. So that's leg in, base, leg out. And if you wanted to include this next candle over as part of that zone, that's understandable. But what cannot be denied is we have this working its way through a gap as well at some point. So I'm going to put that, let's say, a little bit below. Got a little bit of a gap that it may want to work its way through. And then there's another one down here, another gap down here as well. So if it keeps dropping, then I would say something like that. You have something going on right here. Nothing that, not in terms of formation, it may not be that strong. But let's see, what is the weekly? Even on the weekly, you don't really see a small chair right here. But yeah, they are handling their business, man. And the reason why you might have that little this is on the monthly chart, because that it's at highs right now. So it's finding its sellers levels as we speak. So this is this, I'm sorry, this is supposed to be down here. So this is the gap up from here, and it jumped up here and created a buyer zone technically with that gap up. All right, we're gonna swing back over to SPX. So leg in, base, leg out with the gap up right here. I don't know what the heck is going on in here, but it obviously turned around. And then it's in a zone, it created a buyer zone back here. And then it's sitting in that buyer zone right now. And you got, yeah. So this is, matter of fact, let me do it this way. I'm going to add this in here just to say gap, because there's a couple gaps in here to begin with. So we want to make sure they're not confusing. Then you have the smaller one, duplicate. All right. So gap here, smaller gap here. That's what's happening. And the only reason I didn't mark this one as a seller zone is because this is not a, I guess you could say, a traditional seller zone formation. And according to what I'm used to charting, but on the recent call, it may even been yesterday, we were talking about this is called, I guess, an advanced formation. And all I did was just zoom in on that one particular candle. And what I'll do is I'm looking at the price action of just that wick, right? Because earlier I was saying that when I set the levels, normally for the lines, I count where the price action went. So I'm just looking at the price action of that wick. And I'm going to go down to the 4 hour, see if there's a formation that I can chart. And there is. So I could do a couple things can be done actually, but we're going to activate this one right here. Right? So I'm just going to and all I'm doing is just looking for I was just looking for a level that I could set to use as a seller zone that's inside that wick. That's all I did. Zoomed in on price. And so this one is the first one that I see. And then I'm going to mark the next one that's up as well. All right, so this is NVIDIA. This is on the 4 hour chart. And we're inside this wick from the daily. And then duplicate that. So these are the next two levels up. And there's also one right here and one right here. And this is basically in this general, still in this general area. So when I go back to the daily, I can see, oh, let me see. Oh man, I was way off. Man, I gotta, man, dude. And them lines look good too. So man, I thought I was down front of. Okay. Man, I was just happy. I was like, dude, I'm gonna have to get into this trade. Nigga, we ain't even close. All right. It's this one up here. My bad, y'all. My bad. Leg in, base, leg out. Strong zone, though. All right. So daily. There you go. There you go. It looks better. I knew something was wrong, too, when I saw that green line. It's like, man, I'm close to this green line. So this is the formation that's inside of this square. Okay. On the daily, that's just the wick up there. So now we do have a sell zone. Price did come up here. It did turn around. So I will be looking at this as the sell zone. The stronger buyer zone numbers, obviously, because it's the daily. I also could have went up to the weekly to see if there was something there, but again, there's nothing up that's that high up. So in terms of the highest points that it has been at, gave me the 4 hour. So that is what, and there is one right here that's a little bit lower, but that's putting you closer to the green line anyway, where I was at before. So the thing to note about this part right here is just that if price comes back up, it may turn around. It still may turn around here. So that's something to be aware of. All right. So let's say if we did this as an example so we can see it. This might be where I was at before, but switch to daily. Right. So just above it, where this line hit, this is saying that inside this candle on the daily, there's a 4 hour seller zone that's right here, which could be what caused this to turn around. Because this is where it stopped before. And so now we got 2 levels that we can work with inside of that 4-hour candle, right? And I think, if I'm not mistaken, I charted this before, but I didn't need to chart this one, is what I think happened. But anyway, matter of fact, I'll just leave both of these the same. Okay, so we got seller zone 1, boom, seller zone 2, boom, and you should be good, right? So you want to use those numbers. According to the chart, we should be good. So we're going to swing back around to, now we're going to swing back around to the S&P. Switch it to our 15 minutes. All right. So this is our time frame where we will start looking to determine if you're going to do the breakout strategy. As a reminder, so when we started today, I'm about to mark this as the start of the gap. Right. So what happened was, this began by gapping down this morning, and it has stopped 2 times at 51.41. Okay. And then keep in mind that yesterday, or not yesterday, but in a previous cycle, what this did was this gapped up from here to here originally, and now it has pushed down. It gapped back down into this area, is what happened. So everybody's temperament is different as opposed when it relates to marking the gaps. But in my case, I just figure price has pushed down into that area, so I feel comfortable marking this as a gap, since it's still trying to fill it. This is on the 15-minute chart for SPX. So there has not been a lot of movement in terms of a push in one direction or the other so far on the S&P 500, at least in terms of us or anybody in the ecosystem that's trying to wait for it to push out. This definitely has been pushing down. So this would be something to keep an eye on. Yeah. Russell 2000 is another one that we'll take a look at, and we're gonna bounce. We're gonna bounce like a basketball on the inner city playground. Okay. Come on, Reuter. There you go. Russell 2000. All right. So this is Russell 2000. We just was looking at Russell earlier, Russell 2K. And monthly, it's actually trending to the side lately. But this, if you consider this a cheer formation, leg in, 2 in the base, leg out, then this would be in a seller zone for that cheer. Right. That's how I would look at that. 2138 should be a significant number too. That's on the monthly. Okay. On the weekly, we have a level right here for 2084. Boom, boom. Leg in, base, leg out. Depending on how you chart these, this, leg in, base, leg out. This is a weird leg in as far as I'm concerned, but it is, it's there. So I'm not even sure how I would chart that, but I would definitely acknowledge that something is happening. Then I see a cheer down here. And I see maybe these two in the base and the leg out right there on the weekly. But these are kind of like what formations that are, I don't want to say strange, but non-traditional. Maybe that's the way to say it. Non-traditional. But I think if I was going with the strongest, I would do leg in, base, leg out up here, and I would do this chair on the weekly. Those are two that I would do just to, let me just mark them and see what happens. See what happens when we go switch to the daily chart. All right. Thank y'all for the people who are hanging out with me, and appreciate it. And if you're wondering, I definitely do talk to myself while I chart. So I apologize in advance for anything. I apologize in advance and afterwards for anything I may have said that rubbed you the wrong way, because I definitely be in my own world. So this was the weekly one. So what ended up happening, there's a couple different ways we could chart this in the seller zone. If we want to do a cheer, leg in, two in the base, leg out. That's one way of doing that. So we'll add that in there. So let's just add that in there. Make it green. That's my color for the daily charts lines is green. So let's say we were to go like here. This would be a gap up right here. So that would be leg in, two in the base, leg out. And this is where it has, bounced off this line before. Okay. And to be honest with you, this right here looks just like a buyer zone formation. Leg in, base, leg out. So let's say a couple of days ago, 1, 2, 3, 4, and probably 4 days ago, this was a zone, this was a zone on top of a zone. And so it retested and came down. So I will put it like this. Whoops. Leg in, base, leg out, and it gapped up right here. And it's actually a couple gaps happening at the same time in this area. So let's say if we go here, this is where it gapped, so it closed here. And then let's say it gapped up right here as well. Gapped up in between there. So when it gapped up, it left some space, did its thing, gapped down right here. So today's candle is caught between two gaps, right? Russell 2000 is small cap stocks. So what this is telling me so far is that this is bouncing off this line, bouncing off this. This is the bottom of one of the gaps right there. So it's bouncing off of there. This was a seller's gap. And how do I know that? Because it dropped. It pushed down. Sellers pushed this down with enough force that it created that space. So when it goes to retest, it might just continue bouncing off. So I do believe I hear the Lord saying to look at doing the 0 DTE. What's today? Today's the 19th. That's the only thing I don't like about it on Thinkorswim. If you're trading certain things, especially Reuters, this is this is Russell 2000. It's a cash settled account, so you don't do the shares. But the only thing is, they don't always have 0 DTE. Thinkorswim doesn't always carry the 0 DTE time frames for you. So you have to be trying to get in for something for tomorrow. But if I was doing it, it would be 21.49, so 21.50. So that would be about 80%. 80%. If I was doing, I'm doing credit spreads because we're sellers. So that would be 105 is what it's looking like right now. But it's a 5 spread, so that's $500 of collateral being put on the line. Then, could execute the trade and get that for tomorrow. All right. Alrighty. Okay, my fellow traders. So we are still in the mix on this and waiting. And to be honest with you, I'm expecting a lot more activity tomorrow because of the feds once they step in to do their thing. So no problem, Lady T. Thank y'all very much for, like I said, for hanging out. Don't forget, we do have our challenge, the Options 411, 6 weeks live coaching. Let go of the guesswork, embrace expert guidance for options trading mastery with our Alyssa Pinkleton, educatorthetrader.com. Starts April 1st. We're going over opening new accounts, navigating platforms, understanding the trading lingo, learn charting, selling strategies, and create your own trading plan. That is the ticker that is scrolling at the bottom. You can always come back and look at that again to get the information, but educatorthetrader.com is where you can go. Our E2T daily declaration. By faith, I am a successful trader. I'm a wise and knowledgeable trader. I make smart and lucrative decisions for my portfolio. Money likes me. Because money is comfortable around me, it is drawn to me. Our EGT daily prayer is, Lord, give us wisdom and knowledge for our trades today. Help us to make smart and lucrative decisions for our portfolios. All right, everybody. The VIX actually is down slightly. It is at 1430, down 0.21, 0.21%. Dow futures is up 0.19%. S&P futures is down 0.22%. And NASDAQ futures is down 0.66%. You all have a great trading day. Stay green. Get this money. And we will talk to you all later. See you in Telegram and or see you in the market. Thank you.